In the fast-paced world of investing, few names command as much attention as Michael Burry. Widely recognized for his accurate prediction of the 2008 market crash, Burry has established himself as a legendary investor with a unique perspective on market dynamics. In this video, we will delve into Burry's recent stock purchases, examining what they might indicate about his current views and where he believes the market is headed. Contrarian bets have become synonymous with Michael Burry's investment strategy. His latest 13F disclosures reveals a surprising trend. While others were fleeing in market turmoil, Burry was loading up on two sectors that were perceived as risky: banks and Chinese companies. This shift in focus raises intriguing questions about his convictions and the potential opportunities he sees in these sectors. Let's start by exploring Burry's interest in Chinese companies. At the top of his holdings list are Alibaba Group Holding Limited and JD.com Inc.
These tech stocks, and he started buying at the end of 2022 and has been increasing his stake all along. Again, while COVID zero was going on, that's when he was buying. JD.com and Alibaba now make up 20% of his fund's portfolio.
Notably, Burry doubled down on his investment in Alibaba during the first quarter of this year. Despite the stock being down around 3% year to date, investors may wonder what prompted this move, especially considering the challenges faced by Chinese companies in recent times. Alibaba, the e-commerce giant, has been weathering regulatory concerns and geopolitical tensions. However, the company's long-term growth prospects appear robust, which likely influenced Burry's decision. Additionally, the recent announcement of huge and historic investments in their Taobao shopping platform gave the stock a much-needed boost. Burry's investment in Alibaba seems aligned with the sentiment of 375 hedge funds, as indicated by Insider Monkey's database, which also holds stakes in the company. JD.com, another Chinese e-commerce player, has experienced a significant decline of around 34% year to date. This can be attributed to the consumer concerns over rising inflation. However, JD.com's impressive first quarter results, surpassing estimates, might have caught Burry's attention.
From a regulatory perspective, things have been improving. Now they have to improve, I guess, from a business perspective for many of these companies. But, JD did beat.
While Chinese stocks on a whole have been losing ground due to a slowdown in economic momentum, Burry's interest in Alibaba and JD.com suggests that he sees untapped potential in these companies. Burry's recent investments in banks hint at a possible shift in his investment strategy. Scion Asset Management, Burry's hedge fund, added 17 new stocks to its portfolio during the first quarter. A significant portion of these new additions were bank stocks, which had been struggling in the aftermath of the SVB collapse. This move may reflect Burry's confidence in the buy-the-dip strategy that gained traction during the broader market sell-off. One notable name in Burry's latest portfolio is Wells Fargo, and while his bet on First Republic Bank didn't fare well, it accounted for only a small fraction of his overall holdings. Wells Fargo, on the other hand, seems to align more closely with Burry's investment thesis. By taking positions in banks that were being hammered, Burry might be signaling his belief in their potential recovery and future growth. Michael Burry's investment decisions often leave investors and analysts curious about his thought process. His sporadic activity on Twitter, where he tweets, deletes, and occasionally reappears, adds to the intrigue surrounding his investment strategies. In January, Burry's tweet of "sell" prompted fears of an impending doomsday scenario, only for him to admit in March that he was wrong to suggest selling. Burry's acknowledgement of the success of the buy-the-dip strategy, praising the new generation for adopting it, indicates a possible change in mindset. This could explain his shift from being the big short to becoming the big long. His Q1 portfolio additions and emphasis on banking stocks align with the narrative, suggesting a belief in potential for market recovery and opportunities for long-term gains. While deciphering Michael Burry's investment strategies might be challenging, his recent stock purchases provide valuable insight into his thinking. By investing in Chinese companies and banks when others were apprehensive, Burry has displayed a contrarian approach that seeks out overlooked opportunities. His increased stake in Alibaba and JD.com reflects his optimism about their long-term growth prospects despite the challenges faced by Chinese stocks. Furthermore, his interest in bank stocks indicates a possible change in strategy, potentially driven by the belief in their recovery potential. As markets continue to evolve amid rising interest rates by the Federal Reserve, investors eagerly await Burry's next move. One thing remains certain: Michael Burry's unique perspective and contrarian bets continue to captivate the investment world, making him a figure to watch closely in the years to come.